Welcome again, traders. This is part 3 of an instructional video series that describes how we configure workflow processes within both Strategy Quant X and Quant Analyzer to produce diversified systematic trend following portfolios. Now, for the purposes of this video series, we are using a small universe of only 21 Forex markets that are readily available in microlot form to the retail trader using MetaTrader 4. But the principles of this particular workflow can be applied across any liquid asset class such as equities, indices, bonds, fixed income, futures markets, and even cryptocurrencies. Ideally, you don't want to restrict yourself to any single asset class as you are seeking to benefit from market diversification principles, so your universe would usually be far wider than what is described in this video. But for the purposes of this video series, we're keeping it small to avoid having to enact a Tolstoy epic. So we left part 2 of this series where we had completed configuring the Trading's Options tab in the Build Strategy step of the workflow process, which is the first step in the workflow, and we'll continue on from here. If you haven't already listened to parts 1 and 2, then I strongly advise it so you can quickly get up to speed with where we are in this particular workflow process. So, having completed the configuration of the Trading's Options tab, we now move on to the building blocks of the design stage of this workflow process, and this is a very important tab for our particular processes. This is where we embed the core design principles developed by this build step into each solution generated by the process, upon which then we randomly generate variations around. So, as discussed previously, this particular workflow process we are currently describing is used to generate breakout strategies that we plan to ultimately incorporate into our diversified trend following portfolio. So the building blocks is the tab where we enforce breakout design principles into each solution that is generated. In a later video of this series, we will also be developing a workflow process for alternative trend following strategies, as opposed to these breakout methods, to further supplement the system diversification objectives of the entire portfolio. But for this particular workflow, we want to keep our focus directed towards breakout models only. So for the entry conditions of the following breakout technique, within which then I want to develop diversified variations around, I simply want to use 2 indicators, namely the Donchian breakout indicator itself, which in SQX is termed the highest high or highest low indicator, and the ADX indicator, which is used as a supplementary indicator used to confirm a breakout when strong momentum is present. While there are many different forms of possible entry breakout condition, I want to keep it simple using a valid breakout method that has clear logical sense. The Donchian channel is simply a method to identify highest highs and lowest lows of price over a defined lookback. So for example, a 500 period Donchian channel records the highest high or lowest low over a defined 500 bar lookback. If price then breaches this level, then we know we are moving either to a new high or a new low over the lookback history. But in addition to this lookback channel, we also want to ensure that momentum is building by using an ADX indicator, which provides a useful confirmation to our Donchian breakout technique, as it requires that we also have a momentum impulse driving the price to that higher high or higher low. This additional confirmation signal provided by the ADX indicator helps to avoid whipsaws when price is merely testing these highest highs or lowest lows, but lacks momentum conviction. So let's set these 2 indicators up in the Building Blocks tab. We'll start with the ADX signal conditions first. And you can see that we can apply many different signals using the ADX indicator alone, but for now we simply want to apply the ADX is rising condition. Having an ADX indicator that is rising is symptomatic of building momentum for either long or short breakouts, so it is a very useful condition to use for breakout methodologies. So we'll now select it from the signals list in the Use column, and furthermore apply a 100% weighting to this indicator, as we want all solutions generated by the build phase to include this condition. So we type 100 in the weight column. Now let's refer to the custom parameters. You'll see that I've applied a weight of 100% to the first set, which will therefore ensure that our solutions only refer to this one set range. Now let's refer to the parameter values themselves, and you'll see that I am allowing variation in the ADX in terms of the period lookback from a minimum of 10 to a maximum of 100 bars of lookback, with a step interval of 5 and a shift of 1, which refers to the ADX value on the immediate preceding bar. This range of options is sufficient to allow for diversification about the ADX condition for the strategies generated. So that's it for setting up the ADX indicator in the Building Blocks tab. So now let's scroll down to the highest lowest indicator, which is Strategy Quant's proxy for the Donchian channel indicator that is a popular choice as a breakout indicator. And let's tick the option that the bar opens above the highest after opening below. Now you need to note that this is a typical long entry breakout condition, but you would also remember how we set the symmetrical rules to apply in our trading models on the What to Build tab in a previous episode. So what this means is that if we define the long entry in the Building Blocks tab, then SQX will automatically generate short entry conditions using the symmetrical condition. So by selecting the long entry condition, we actually are also setting the short entry condition under SQX rules. Now, like the ADX rising condition, we also want to apply a 100% weighting to this rule to ensure that the Donchian breakout is embedded within each strategy developed by the build phase. Also remember how we set from between 2 and 3 entry rules in the What to Build phase, which was showcased in a prior episode. By using a 100% weighting for both the ADX rising condition and the 100% weighting for the Donchian entry condition, we already therefore are using 2 of the 3 available entry conditions at our disposal. So now let's refer to the custom parameter values for the Donchian breakout condition. Once again, I've applied a 100% weighting to one set file, so now let's look at the parameter values we'll use for this set file. As you can see, I'm allowing for a very long look back of the Donchian channel of up to 2000 bars by using a very broad range between 25 bars to 2000 bar look back with a step value of 25. This operates off the high of the bar, which is typical of Donchian indicators, and we evaluate the breakout condition using the preceding bar to the entry bar. So that's it for the indicator building blocks that we'll be using for our build function, and we can now move on to order entry conditions themselves. So now we navigate to the order types window of the building blocks interface. To keep these models very simple, I only use market order entries. So in the custom parameters, I ensure that the allowed duplicate trades is set to false. If I had used entry stop or entry limit orders, then we would also need to configure stop limit building blocks in our settings. But because we only use market entry orders, we do not need to worry about these additional settings. So that's it for the entry condition. Now, onto the exit conditions. This is where we need to set our trailing stop conditions and ensure that we have not set a profit target condition. You will notice that in the required column that both a stop loss and a trailing stop condition are required for all our models, and this is essential to the assumptions of our divergent trading models. Let's have a quick look at the custom parameters we apply to this trailing stop condition. You will notice that the parameter sets adopt an ATR base value only and not a price level or fixed value level in pips. Furthermore, when we refer to the ATR base parameter values, you will see that we allow for possible multiplier values that range between 5 times and 20 times with a 5-step interval. Now, in addition to these required exit conditions, we also allow for a degree of diversification in exit condition by allowing for the optional use of a move stop loss to break even condition and a trailing activation condition. The optional trailing activation condition allows us to defer the implementation of the trailing stop to a point where price has to move a required range in ATR before the trailing stop is activated. The custom parameter values only allow for ATR-based values that have multipliers which can vary between 5 times to 20 times with a step value of 5. The optional move stop loss to break even condition also allows us to generate variations which require a movement of a defined level of ATR before the initial stop loss is moved to the break even point. This may be useful in those instances where we significantly delay the implementation of the trailing stop loss. So the custom parameters we apply to this optional exit condition is also an ATR-based method with multipliers that range between 1 times and 5 times with a step of 1. So that's it, folks. We have completed the building block step, which has pre-configured the broad rules for breakout methods that we can now randomly diversify around to generate possible breakout systems. Now, before we move on, we would like to save the configurations we have applied to this building blocks tab, so we can quickly apply them again for other workflow processes if we need to. So at the base of the tab, you will see a save icon. Simply click on this and a screen will pop up, which will allow you to save your configurations using this tab. You will note a separate load icon to the left of the save icon, which allows you to load a previously saved building block configuration. Okay, so now we are done with the building blocks tab. So now it's on to the settings in the money management tab. So here we are on the money management tab. And first we choose our initial capital investment that we would like to allocate to this first step of the workflow process. So I have elected a $10,000 start. Setting such a low initial capital value is important for retail traders looking to build strategies with microlot accounts. If you use a large capital amount for the build phase, it will generate strategies that may only be capable of being implemented using a large capital account. So for the build phase and the initial retest phases of this workflow process, we will use a small initial capital base for testing. So $10,000 will be the initial equity of the portfolio used to build strategies in this build phase for AUD JPY on the D1 timeframe. Next, I need to define the money management method used for this step. Now, during the testing phase of the workflow process, I do not wish to muddy the waters of my testing by the impact of compounding. Therefore, I elect to simply apply a fixed dollar amount per trade of $50 to each entry. This effectively represents 0.5% of the initial equity of $10,000. I also ensure that I apply 2 decimals so that my order size will be rounded to the nearest micro lot. Now on to the lot configurations, which we set in accordance with our broker's specifications to determine the minimum and maximum lot sizes possible if our money management method prevents us from calculating an allowable lot size. So for Pepperstone, the minimum lot size we can trade is a micro lot, or 0.01 lots, and the maximum lot size allowed is a size of 100 lots. So I enter these minimum and maximum allowable levels into these fields. So now we are done with the Money Management tab. And now onto the Cross-Checks tab. So, as previously discussed, we undertook the initial build phase using the fastest method of testing, namely a level of precision that only looks at the open, high, low close of each daily bar. We now want to more rigorously test the developed solutions using minute data across the daily bar. This is a slower but more accurate method of testing the strategies. So to do this, I turn on the higher level of precision testing regime and then double-click to check the settings we'll be using. So we can see that the main test already undertaken for the cloned AUD JPY-D1 data using a 1 pip or 10-point spread, but now we want to select as our cross-check the slower 1-minute data tick simulation method. We also want to apply the same 1 pip or 10-point spread in our cross-check method. Now we check the settings in our Filtering tab. This is where we define the conditions that are required to pass this more comprehensive cross-check method. Conditions developed here in this tab work independently to the conditions of the main test, which are detailed in the Ranking tab that we'll be coming to shortly. What this means is that by specifying conditions in this filter, the solutions developed during the build phase need to pass the conditions of both the main test, the faster test, and the cross-check method, the slower test, across the more detailed testing environment. So what criteria are we assigning to validate this cross-check test? In this instance, we require our higher precision cross-check to possess at least 90% of the net profit of the main test, at least 90% of the number of trades taken in the main test, and a maximum drawdown in the high precision test that is less than 110% of the maximum drawdown obtained in the main test. So now that we have set our validation criteria for our higher precision cross-check test, we can now move on to the Ranking tab. Now within this Ranking tab, we define the validation conditions that need to be passed by our main test and the number of strategies that we can store in our databank. So let's check the configuration settings that we apply here. First, to the databank settings. Now we have already discussed in the prior video episode how we save these validated strategies that pass this initial build step in the results databank that we can see by popping up the databank listing. So how many do we want to create at a time? I personally find that for the capabilities of my PC that I use for this workflow process, that I can comfortably use a setting of 3,000 strategies to store in this databank before running into memory issues. But you will need to find your own comfortable setting to use. Too many to store in the databank and you could run into memory problems or the time to undertake the processing of this single step of the workflow process. So you need to determine your own setting. I then also want to stop the build strategy step when the databank has reached this maximum allowed level of 3,000 strategies. So I select this option. Now personally I don't use this next function, but here you can choose the data set from which to compute the total overall fitness of the strategy. In this case it is set to using the return to drawdown ratio of the main test undertaken by the build phase. Now onto the important filtering conditions used to validate the main test results and allow those that have achieved these validation criteria to be stored in the results databank. Now remember that when we apply the cross-check tests in the Cross-Checks tab, the validation criteria of the cross-check are evaluated separately, and these cross-checks must be validated as well as the validation criteria performed on the main test, which is the subject of this tab. So let's look at the automatic filtering settings first. Now for these long-range trend-following tests, the only filters I have applied to automatically dismiss any generated strategies are the no trades condition and the zero duration trades condition. The rest of the settings are not relevant to this particular workflow process, but may be very relevant to other workflow methods. So now it is on to the custom filters applied to the main test of the build strategies phase. So as you can see, I have applied a profit factor criterion of greater than 1.3 times that needs to be achieved by the entire test sample generated over this 13-year test during the build strategies step. I have also chosen a trade sample size per solution of at least 10 trades over this 13-year test. Notice how small this required sample size is. You will remember how we are specifically targeting the exotic extreme conditions of the fat tails. So targeting these outliers therefore means that our trade sample size per solution will be low and not too high, as these extreme events are few and far between. A too high trade sample size will mean that we are over trading or encouraging our methods to activate during more normal market conditions, which we want to avoid. Now, despite the problems that small sample sizes bring in our confidence that these strategies will perform similarly in the future, we have other ways of building our confidence with this low sample size per solution, such as the design criterion we have embedded into our solutions that will catch any significant outlier, plus in the use of multi-market tests to ensure that despite these low sample sizes per solution, they are still rigorously tested across a vast array of alternate market data sources to reduce our propensity to produce possible curve fit results. And we will discuss this further multi-market test when we describe it in this workflow, which occurs at a later stage. Also note how I require a CalMAR ratio of greater than 0.2 to validate strategies developed through this build strategies phase of the workflow process. The CalMAR ratio, like the MAR ratio, is a risk-adjusted performance metric whose use ensures that our solutions are selected based on their ability to both maximise returns and minimise their overall drawdown exposure. This is our predominant performance tool that we use to ensure that the strategies that pass this phase are both robust across a broad class of different market conditions and also perform well when trending conditions are favourable. Now, the final validation metric we use is the average win to average loss ratio. We want to ensure that we embed positive skew into our systems where the average win is greater than the average loss. So we are nearly there. Now we just go to the Notes tab to provide summary information of what this workflow is about for future reference. And now we are done for the build strategies phase. Now that we have fully configured the build strategy step of the workflow process, we could run this step of the workflow at this point. Alternatively, we could wait until we had configured all the remaining steps of the workflow process before we executed the entire workflow. So, given that we will still have more steps of the workflow process to describe in future videos, we will wait until we have completed the detailed description of all steps before we run the entire process. So, this is where we're going to wrap up this episode today. In our next episode, we'll then move on to the additional retesting steps of the workflow process that we undertake to generate very robust trend-following portfolios that we combine into our trend-following portfolio. So, stay tuned, guys, and trade well and prosper.